Good morning, everyone. A very warm welcome to the 15th Monthly Indirect Taxes Colloquium, organized by VILGST and Tax Connect. I would like to introduce our speaker, Mr. Vivek Jalan. Mr. Vivek Jalan is qualified CA, qualified LLM, and LLB. He is the chairperson of the Indirect Tax Core Group of the CII. Also, he is the chairperson of the Fiscal Affairs Committee of BCCI. He is the regular speaker of various professional forums on the key area of direct and indirect taxes. During the session, please put your video and microphone off. If anyone has any query, please write in the chat box. We will answer all your queries at the end of the session. Now we request our speaker, Mr. Vivek sir, to take the session forward.
Thank you, Mushmi. I'll just share my screen. Is the screen visible, Mushmi?
Yes, sir.
Yeah, just a second. Yeah. So, good morning to all the delegates and participants who have joined this 15th Indirect Tax Colloquium organized by Tax Connect and VILGST. We thank VILGST for partnering with us now for over 1 year for holding our monthly indirect tax colloquiums. And thank you to all the participants also, many of whom, I can see regularly on our indirect tax colloquiums, especially today for joining on the very cold Saturday morning. And Happy New Year to all the participants. Friends, we had our last indirect tax monthly colloquium on 17th of December. And it is not even 1 month, but over the last 20 days, there have been so many amendments in GST. There have been so many changes. So many things have happened across the country in GST, in customs, DGFT, in income tax. So many things have happened. Yesterday, we also saw the first circular of 2023 in income tax on the extension of the timelines. There have been so many judgments, landmark judgments, which substantiate a lot of taxpayers' views, some which have gone against the taxpayers also. So it is very important that if you are a tax professional practicing indirect tax, either in practice or in industry, it is important that you are not only aware of these changes, it is important that we discuss on what is happening in industry. It is important to do interplay, right? I'm sure many of you would have gone through many of the circulars and notifications which have been issued apropos the 48th GST Council Meeting. But there are many interplays between one circular, another circular, one notification, another notification, GST, income tax, GST. Some of the notifications, some points which you may have missed. In fact, yesterday only when I was preparing for this colloquium and I was going very deep into the notifications and circulars, many of the things also struck me. So therefore, it is important that we have this kind of discussions, we have this kind of forums, and the important thing for a live webinar rather than a YouTube live or any other recording session is that you can ask as many questions. It not only helps you, it also helps the other participants, as well as it also helps to enlighten the speaker, as well as help the speaker to think further on what can be the implications of the amendments. So with this, we will start one by one on the agenda items which are on your screen. But before getting into the first agenda item on the input tax credit, for all the practicing advocates, in fact for industry also, and the some of I understand some of the department officers have also joined this webinar today. So for all of us, a very important awaited development is the formation of GST tribunals, which is now not due. It was due 2 years back minimum. Now the water has flown almost over the head, and we are all looking forward to GST tribunals. In fact, in some of the media forums, reports have been there that GST tribunals would be formed in 3 to 4 months. But as per our understanding, this GST tribunals formation issue was on the agenda item in the 48th GST Council meeting, but could not be discussed because of paucity of time. Therefore, the section 109, which has to be amended, that may not be amended in the budget until unless it is passed as a money bill, which is chances are very rare that it would be passed as a money bill because council recommendation has to be made, and that has to be only made in case majority vote is there. However, what we understand is as is very common, especially after the Supreme Court's decision in the case of Mohit Minerals. There is a center versus state tussle wherein the center wants a national GST tribunal which is integrated so that there is certainty of decisions. But somewhere to keep up the federal structure, the states too want to be empowered in the GST tribunals so that the states say and the states officers say also is taken into consideration before a view is formed. We are all aware that GST tribunals would be the far last fact finding authority, and after that the high courts would not look into the facts of the matter, they would only look into the law. So this decision needs to be taken somewhere, a consensus needs to be built. Even technical members need to be found out. How many members will be there in this from the state? How many members would be there at the center? A discussion has happened that there has to be a single decision as far as the GST tribunals are concerned, and there cannot be multiplicity of opinions across various states and various tribunals. However, friends, another view is that multiplicity of opinions, multiplicity of discussions on topics is very important to reach a legal conclusion for a democratic country to move forward and tax laws to shape up going forward. So in this background, let us see, as far as we understand, still there are 9 to 10 months left for the GST tribunals to be formed, and we hope that at least in these 9 to 10 months a consensus is reached and the tribunals see light of the day, because as it is, a lot of litigations have already piled up under GST, and to start with, the tribunals would have a mountain of work to do. So now coming to the important amendments and the implications of those amendments, why the GST Council's 48th Council's decisions. The most important amendments, if one would see, in fact, there have been many important amendments. We would come one by one. Some of it which might have linkage to other issues under GST. But two important amendments in input tax credit is first, the insertion of Rule 37A after Rule 37, and a circular on GSTR2A versus 3B mismatches reconciliation for 1718 and 1819. First, let us go through 37A, which is, I would say, a very welcome development. However, it is important to note that all the tax professionals' work would further increase. While there would be an immediate relaxation, but a word of caution, risk would increase for taxpayers, recipients, due to insertion of this rule 37A. So what is 37A? It is a relief momentarily from section 16 to C for taking input tax credit. So after 1st of January 2022, while matching our 2A 3B and claiming the input tax credit in the GSTR 3B, what do? We first match the GSTR 2B versus our purchase register, and only in case the inward supply of goods or services are reflected in GSTR 2B, then we take the credit. But we also check whether the supplier has filed his GSTR 3B or not. Why do we check whether the suppliers have filed their GSTR 3B or not? Because there is a precondition under section 16 subsection 2 clause C of the CGST Act, which requires that input tax credit can be only taken by the recipients in case the tax has been paid to the government. Tax can be paid to the government only when GSTR 3B has been filed by the suppliers. So in case GSTR 3B has not been filed by the suppliers, then tax cannot be said to have been paid to the government. Therefore, as of now, what we are doing is we are not taking that input tax credit where the supplier has not filed his GSTR 3B. However, Rule 37 capital A provides a momentary relief. It provides that instantly you can take the input tax credit. So for example, from 27th of December 2022, where now for December, you will be filing your GSTR 3B on 20th of January this month. So what you can do, number one, is for December 2022, even if your supplier has filed his GSTR1 but not filed his GSTR 3B, you can take the input tax credit. Thereafter, you have to keep on tracking. If the supplier files his GSTR3B by 30th of September 2023, then you can take such input tax credit you have already taken and that will prevail. However, if the supplier does not file his GSTR3B even till 30th of September 2023, then you have to reverse the said input tax credit you have claimed earlier without interest by 30th of November 2023, right? So while you are filing the return for the month of October 2023 on 20th of November 2023, then if you find that the supplier has still not filed his GSTR3B, then you reverse the input tax credit which you have earlier claimed with interest. Clear? However, say in the month of January 2024, the supplier files his GSTR3B not filed earlier, then you can reclaim it back, which means that the time barring period for reclaiming ITC is not the same as the time barring period for claiming ITC. In simple words, the time barring period for claiming ITC for the first time for the financial year 22-23 is 30th of November 2023. This time barring period would not prevail for reclaiming this ITC which you have reversed once the supplier files his GSTR3B. So one more important step which you need to take when you file your GSTR3B by 20th of January 2023 for the month of December 2022 is, in case from 1st of April 2022 till November 2022 for financial year 22-23, if you have not claimed prima facie and suo moto any input tax credit which is reflecting in your GSTR3B, but the supplier has not filed his GSTR3B, then on 20th of January 2023, when you are filing your GSTR3B, please claim such foregone input tax credit for April till November 2022, right? Now, another very important question, friends, as we have discussed that you might have already gone through this rule, but it is important to dwell on the intricacies. You see the second proviso 237A on your screen, and which we have discussed just now also, right? What does it say? That if you have reversed the input tax credit earlier because the supplier has not filed his GSTR3B, but subsequently you find that the supplier has filed his GSTR3B in any tax period thereafter, then you can reclaim it back. Now, many taxpayers are asking us a question. Say, for example, for the financial year 21-22 or earlier financial years, you have reversed and paid off the ITC which you have taken because the supplier has not filed his GSTR3B. And now if you find that the supplier has filed his GSTR3B, then for the earlier periods, that is 2021, 22, 20, 21 and earlier periods. Can you reclaim back that ITC which you have earlier reversed? In our legal submission, as per second proviso to Rule 37A, if the supplier for earlier periods has filed his GSTR 3B even now, then there is no binding on the reclamation of input tax credit. There is no limitation period for such reclamation, and you can reclaim back that input tax credit in your GSTR 3B, right? Another question can be, say you have suo moto not taken your input tax credit at all because the supplier has not filed his GSTR 3B. Then can you claim it now? Well, this can be disputed and litigated. However, our legal submission is that once the right for claiming input tax credit is fulfilled, then procedural considerations cannot overtake a substantive right of the taxpayer. The fact that you have not claimed the input tax credit initially would be considered as ITC taken and subsequently reversed. And therefore, even then, our legal submission is that the input tax credit can be claimed by you for the first time itself in this GSTR 3B or subsequent GSTR 3Bs, right? So a very, very important amendment and a relief to the taxpayers. It could lead to a lot of savings in as far as working capital outflow of the organizations are concerned. Another very, very important development. Now, this development is for only 17, 18, 18, 19. We all know it now. I mean, this has gone, as you know, nowadays people say, has gone viral, right? Because there were a lot of disputes on disallowance of input tax credit due to GSTR2A versus 3B mismatch for financial year 17, 18, 18, 19 and even thereafter. But for the first 2 years, already the government of Maharashtra had issued a similar circular. Now, White Circular 183, the central government has also replicated such circular. So for financial year 17, 18, 18, 19 for 2 years, in case there is a GSTR2A versus GSTR3B mismatch, then you have to do 4 steps, right? What are those 4 steps? First step, you have to see whether other conditions of availing of input tax credit are fulfilled or not. So have you received the goods or services? Have you filed your returns? Is the input tax credit not blocked? You have to ensure that. And also, very important, you should have a tax invoice. Now, it is our submission. We have submitted this in various other forums again and again, especially for the larger corporates. Friends, please have hard copy of the input tax credit invoices, debit notes, bill of entries, or other duty taking documents. If you do not have ink signed documents, at least ensure digital signed documents signed with a digital signature. Scan copy of invoices are not duty taking documents, right? As per the Evidence Act, and input tax credit can be denied if you do not have this kind of duty taking documents. Now, after you have ensured all this, then you have to see if the GSTR2A versus 3B mismatch per financial year per supplier. Very important. In one financial year, 17-18, for one supplier, if the 2A 3B mismatch is more than 5 lakhs, take a CA certificate or a CMA certificate. Now, many of the taxpayers have asked us, who will take the CA certificate? Is it the recipient or the supplier? Friends, in our opinion, a CA or a CMA is an independent professional. No matter who hires it, whether recipient or the supplier, he would do his due diligence as per his professional code of conduct. Avik, am I audible? Somebody is saying
Yes, sir.
not
You
audible.
are audible. Yes, sir. You are
Clear,
audible.
no?
Yeah, clear, sir.
Okay. Participants are requested to check their bandwidth. Yeah. So the question is that CA, CMA, they are independent professional no matter who employs the professional commercially, recipient or supplier. He has to do his due diligence and therefore a certificate needs to be taken. But for all practical purposes, it is the supplier who has to take the certificate because the CA or CMA have to see the books of the supplier and then issue a certificate whether tax has been paid or not. A CA CMA employed by a recipient may not be allowed to see the books of the supplier, right? So that point does not need further clarification at all. It is very clear. If the value per supplier per financial year is less than rupees 5 lakh of discrepancy, then only a supplier's certificate or a declaration from the supplier can be taken that he has paid the input, the GST amount to the government. Now, in case the supplier has not put in your GST number, but has put in another GST number, right? What then? Then it has to be ensured that the recipient or the person whose GST number has been inserted by the supplier, that person has not wrongly taken the input tax credit. So the supplier, as a best practice, can take a certificate from such person that he has not availed the input tax credit. However, the recipient, the actual recipient's charge officer or range officer, as the case might be, would write to the other person's range or charge officer, and such range or charge officer would ensure that the said person has not taken the input tax credit, which leads us to another question. Now, till he does that inquiry, that other officer, he does that inquiry, would the input tax credit of the actual recipient, in this case you, be on hold? Answer is no, it will not be on hold. Your input tax credit would be sanctioned by your officer, right? The moment you take a supplier certificate or a CA/CMA certificate. Now, friends, there are many other issues in this. Now, say for example, if that recipient has taken the input tax credit, then his range officer or charge officer would issue a show cause and initiate recovery action. This circular 183 is applicable only for 17, 18, 18, 19. However, Rule 36, Sub-Rule 4, as accepted by the circular itself, has been implemented from 9th of October 2019. Right? Okay. Somebody says para 4.2 not understood. 4.2, there is no 4.2 here. Okay. You are talking about the actual circular. We'll come back to you at the end of the webinar, last 15 minutes. We'll open the circular and explain. Now, the issue is that Rule 36(4) was implemented from 9th of October 2019. Therefore, this circular should be extended at least till 9th of October 2019, all the 2A, 3B mismatches, right? However, the question is that even post that, till at least 31st of December 2022, until and unless Section 16(2)AA was invoked, it is our respectful submission that as per the Honorable Apex Court's judgment in the case of Bharti Airtel, still it can be contended even for post periods that books of accounts were the primary documents on which the input tax credit could have been claimed, and 2A versus 3B matching was not required beyond Rule 36 Subrule 4, right? But as a matter of precaution and drawing analogy from this circular, it is important that even for periods post 1819, that is 1920, 20, 21 and 21, 22 till 31st of December 2022, you should have such CA-CMS certificate or supplier certificate. It is our legal submission that once these certificates are supplied to the department, then your input tax credit due to mismatch between 2A, 3B cannot be denied by the department, right? Friends, as we are on this topic, a very, very important thing beyond this topic which comes up is the ITAT, Income Tax Tribunal, Hyderabad's judgment in the case of Janendra Kumar very recently. Now, we are all doing matching of 2A, 3B. Please note that Circular 170 has been invoked from 1st of August 2022. Circular 170 requires that you reverse the input tax credit which is showing in your 2B but not eligible to you as a permanent or temporary reversal in table 4B of GSTR 3B. Many of the taxpayers are not doing that. I would reiterate the Honorable ITAT Hyderabad's judgment, right? And the issue primarily. The issue was that any ITC which is reflected in GSTR2B, your GSTR2B, but you have not taken, neither you have reversed in your GSTR3B. It was alleged by the income tax department that this was a purchase which has been suppressed by you, and the consequent sales was made in cash, and it was alleged that this was suppressed turnover. The taxpayer has contested this, right? But I would tell you that this is a very risky position. We are already facing such notices under the erstwhile regime. In the GST regime, the SGST departments, they have already issued this kind of advisories to all the taxpayers in the month of November. Therefore, it is very, very important that you all must follow Circular 170 to the core. 170 is very, very clear. Whatever ITC is appearing in your GSTR 3B, 2B, you must take everything in your GSTR 3B. What is not eligible, you must show it as a permanent or temporary reversal. If you do not do this, then you are violating Circular 170, which would involve a general penalty of 50,000 rupees per return in GST, and it would lead to an allegation of suppressed turnover not only in GST but also in income tax. So we must be careful and invoke this Circular 170 and follow it to the core. Another very, very important amendment I would say it is a double amendment, right? An amendment. Rule 37, apropos second provision to section 16, subsection 2, requires that in case you do not pay to the supplier within 180 days, then you need to reverse the input tax credit for the taxable amount or input tax not paid. The word proportionate was deleted from Rule 37. What it seems that it was an inadvertent deletion by the tax authorities and the law framers. Now they have reinstated that, which now makes the rule very clear that in case you do not pay the supplier within 180 days, then to the extent and only proportionate to the taxable supplies value and the GST amount you have not paid, only to that extent you have to reverse the corresponding input tax credit. So if the supplier bills you for 1 lakh plus 18,000 GST, you have paid him 90,000 plus say 15,000 GST or 16,000 GST, not paid him 10,000 taxable value and 1 or 2,000 rupees GST, then you need to reverse input tax credit only to the extent of 2,000 rupees, that is the taxable value or tax not paid, right? However, a bigger question is, now please kindly pay clear attention. We have discussed this in our video. You can go on YouTube also and see it. In fact, this was discussed by us in our video in October 2022. And we are thankful that CBIC has taken cognizance of this issue and has re-amended this section. Now, the major issue is Section 16(2) second provision says that in such a case, this 180 days non-payment to the supplier, you have to show this payment by adding to your output tax liability, right? So you have to show it as a addition to your output tax liability and not a reversal to your input tax credit. Now, Rule 37 has been now amended to propose that it should be shown as a reversal of input tax credit. Now, if you show it as a reversal of input tax credit, then the rate of interest might be 24%. If you show as an addition to the output tax liability as per the section, then it would be 18%. But the bigger question is that if you show it as an input tax credit reversal, then the interest is applicable only in case it is a input tax credit which is wrongly availed and utilized. Friends, please hold on. Is this a wrongly availed input tax credit? I would say no. It is a rightful availment of input tax credit, and therefore interest in such case may not be applicable at all. Therefore, it is important once you reverse the input tax credit, in such a case, you take cognizance of this rule and section, interplay between section 16(2) second provision and rule 37, and then take the right step to pay the righteous interest to the government. Right. Friends, a very, very important clarification. But more than the clarification, let me ask you a question. Right? Participants are many. I mean, it is not a group discussion, I understand, but still I would ask you a question. I would request you to just answer in your chat boxes as yes or no. Right? Kindly listen to this question. And in your chat boxes, just answer yes or no. Say, for example, you are registered in the state of West Bengal. Your employee goes to Bangalore, stays in a hotel, The hotel charges you CGST, SGST for your hotel bill, for your employee's hotel bill. You do not have registration in the state of Karnataka. Can you claim the input tax credit of this CGST and SGST, which is charged by the hotel in Bangalore? I would request you to give your answers, yes or no. No. Mr. Pramod Singh, okay, says no. Rajesh says no. Madhu says no. Okay, I am not getting even a single yes. Oh, Mr. Kaushik Kumar Mandal says yes. Fantastic. Ashish Singh says yes. Okay. Satish Kumar says yes to the extent of CGST. Fantastic. All others say no. By and large, Mr. Shankar Jha also says yes to the extent of CGST. Jay Lakshmi says yes. Fantastic. Friends, with this thought in the background, let us go through this circular number 184. Now, from 1st of October 2022, right, Ashok Kumar Agarwal says no. Right. So let us go through this circular 184 and then let us understand. Section 12 subsection 8 provides for place of IGST Act, provides for place of supply in case of transportation of goods, including by mail or courier. Proviso to section 12 subsection 8 of IGST Act requires in case the transportation of the goods happens from India up to a place outside India, right? Then the place of supply would be the place outside India, that is the destination of the goods. So let us understand by an example. Now, this is what this circular has also clarified. Now, say for example, you are registered in the state of Maharashtra. You employ a carrier, a shipping line in the state of Maharashtra to export your goods to Japan through Navasheva port, right? So the shipping line or forwarder would charge you for freight amount for transportation of the goods from India to Japan. The place of supply as per proviso to section 12 subsection 8 would be Japan, right? In case the place of supply is Japan, that is foreign territory, then as per section 7 subsection 5 of the IGST Act, it would be considered as an interstate supply and the forwarder would charge you IGST from 1st of October 2022, right? And while filing his GSTR1, he would select state code 96 foreign country, right? Friends, the question is, can you take, you who are registered in Maharashtra, place of supply is Japan, foreign country, can you take the input tax credit? Answer is yes, you can take the input tax credit. But say for example, you are in West Bengal. Can you take the input tax credit? Answer is yes. Friends, if the place of supply is different, and in this case, if you can take the input tax credit of the IGST, then why not? In my earlier example, for a hotel bill where place of supply is different, merely because the place of supply is different, then why cannot you take the input tax credit of the hotel bill? I leave you with this thought, and with this circular 184, let us dwell further on this issue. And now we have a circular in hand from which an analogy can be drawn in this case, right? The GST Council has understood this, and it has proposed to delete section 12 subsection 8 proviso. You will see in the Finance Bill 2023, this budget, this section 12 subsection 8 proviso would be deleted. Friends, but it is a fact that from 1st of October till whenever this proviso is deleted, till that time this proviso will be invoked, till such time at least this circular would be invoked, and till such time an analogy may be drawn. I would leave you all with such thought. Many officers are here, many councils may be here, taxpayers are here. Let us dwell further on this topic and possibly maybe suggest to the council. Friends, another very, very important development, I am sure many of you might have skipped this as a procedural development, but this is going to have wide implications. All those who are registered in Gujarat, this will start. Now, to curb the menace of fake invoices, the council has decided that, gentlemen, I want to catch hold of individual. When in case a taxpayer registers in GST and it is not found after that, then I want to catch hold of the individual who is responsible, right? So even if a company is registered, henceforth, it will start as a pilot project in Gujarat. Even the company, LLP, whoever, other than individual, also if you are registered, taking registration now, then Aadhaar authentication of an individual who signs as an authorized signatory or authorized representative or a director has to do an Aadhaar authentication through OTP. Number two, his photograph will be physically taken. Somebody would visit his premises and take his photograph physically. And all his scanned copies of the documents which have been submitted on the portal, they would be verified by a facilitation center physically. Therefore, the authorized signatory, authorized representative who are mentioned in the GST registration certificate, they would have unlimited responsibility, I would say. In case of any default, friends, authorized signatory, authorized representative would be caught hold of, and they would be, you see, probed for any non-compliances, or in case the taxpayer as an organization closes down or is not found, then such individual would be pinpointed. A very, very important development in Rule 8 and Rule 9. You might go through this at your convenience. Now, we all know that in case of B2C supplies, the place of supply is the ship to address, right? Now, in case you are supplying through e-commerce operators, you need to give the PIN number of the unregistered person also, and the ship to address, the place of supply would be the such ship to address. Rule 109 capital C has been inserted to provide now that you can, even after filing an appeal, you can withdraw that appeal. Friends, many of you, while reading this in the council minutes, in the press release, or even if you read the notification 26, it is important to note that when you are applying to the appellate authority, Joint Commissioner Appeals, as the case might be, the first appellate authority undertakes the functions of the assessment authority. Also, the first appellate authority has no power to remand back your case. So, if you are appealing to your first appellate authority, he is duty bound to dispense of your case and pass a judgment. He has the power of either confirming the demand or squashing the demand or even modifying the demand. Therefore, the first appellate authority can reduce your demand. It can also increase your demand, but it cannot remand back your matter. Hence, Rule 109C has been implemented to provide that even after filing an appeal, if you as a taxpayer find that the demand amount may actually be increased, then you might have the option of withdrawal of the appeal itself. You can withdraw the appeal. However, such withdrawal can be made only before show cause notice or order is passed. But after final acknowledgement is given, if you withdraw the appeal, but before show cause or order, then you need to have the approval of such appellate authority to withdraw the appeal. Right? Other amendments as per this council meeting are that your GSTR1 will have 2 more tables. Till now, your GSTR1 has 13 tables. Now they will have 14 and 15 also. These are related to supplies through e-commerce operators who deduct TCS. So if you are supplying as a registered or unregistered person through e-commerce operators, then you have to disclose in your GSTR1, which you had to disclose earlier also. E-commerce operators would also have to disclose now. So all the e-commerce operators, now an additional table needs to be inserted by you, wherein you disclose the parties who have supplied through you. So a matching will be done, right? If you disclose you have supplied through an e-commerce operator, he doesn't disclose, then there is a mismatch. If your e-commerce operator, even by mistake, discloses that you have supplied through him and you don't disclose, then there would be a notice to you. So you see, we have many e-commerce operators, as our clients, and they are looking at easing of the compliances, because every e-commerce operator, for them, the burden of compliances is very, very important consideration for their business, and the cost involved for the bulk of the compliances. I would dare say that this would further make your compliances bulkier. Right? Table 14 and 15. Relaxation for TDS deductors, that is government authorities, TCS deductors, e-commerce operators, or ISD registrations. Previously, you had no option to suo motu apply for cancellation of your registration, TDS, TCS deductors, or ISD registration. Now you can suo motu apply for cancellation of the registration. Now, friends, another very, very important development. Now, just see, as I said in the very beginning, from 17th of December till today, 20 days, you will see that so much has changed in GST, at least as far as compliances are concerned. Some relaxations, some stringency. Friends, Rule 88C has been inserted with Rule 49(6)(f). Now, you would recall from 1st of October 2022, Section 38, subsection 2, clause B has been inserted. What does 38(2)B say? It provides that in case there is a mismatch between your supplier's GSTR1 and 3B by a certain percentage which would be prescribed, then your input tax credit would be denied, right? That percentage would be prescribed. So in case that percentage prescribed is 10%, and in case your audio is paused. Avik, is the audio fine?
Sorry, your audio is fine. Yeah.
Fine. Okay. Yeah. So if your supplier's GSTR1 and 3B mismatches by more than 10%, say if 10% is prescribed, then your input tax credit would be denied as a recipient. Now, double whammy. Rule 88C. In case now you are the supplier and even your 1 and 3B shows a mismatch by say 10% is prescribed, then you also will not be required, it would not be possible for you to further file your 3B. And such difference would be intimated to you by DRC 1B. You would also have to either pay, or a adjudication would be started against you. You have to explain the difference. Until the time you explain such difference and the difference explanation is accepted, till that time you may not be required to file. It may not be possible for you to file your further 1 and 3B. And in case your explanation is not accepted, then section 79 recovery proceedings would be started against you. So friends, law is becoming very, very stringent, not only with ITC, with outward supply 1, 3B, 3B, 2B, 3B, 2A, right? So much is required to be seen. So we as professionals, either doing our consultancy or in industry, we have to be very, very careful of the GST law. Friends, again, I would put forward before you two questions, right? I would give you another example, and then I would draw you to this circular on insurance sector, which has come out, right? Circular 186 has been issued for the insurance sector. But again, analogy, we are drawing analogy. We are doing interplay, right? First, you are a supplier of, say, mobile phones, because this issue is mainly in the electronics industry. Say you are a supplier of mobile phones. You supply a mobile phone to your dealer for 1 lakh plus 18,000 rupees GST. Now you all know that the rate of the electronic items traveled southwards. After 1 month, you see that the rate of the mobile phone has decreased to 90,000 in the market. So you tell your dealer that, gentlemen, I will give you a discount, a post-sale discount of 15,000 rupees. You go ahead and sell this mobile phone at 90,000 rupees. Your distributor or dealer sells the mobile phone at 90,000 plus say 16,000 rupees GST. Thereafter, you issue a commercial credit note because it is post-sale discount. You issue a commercial credit note to such distributor of 15,000 rupees. Circular 92 is very clear. There is no requirement of reversal of input tax credit to the extent of loss of 2,000 in my example by the dealer, right? So that part is covered. Now the department is asking a question that, gentlemen, this commercial credit note which your dealer has received from you as a supplier of the mobile phone, this is due to a service provided by the dealer or distributor to you as a supplier. And GST would be applicable. The dealer or supplier should have charged GST on this 15,000 rupees, which is paid as commercial credit note. Another issue is, if, say, at the very inception, you have a scheme that, okay, a turnover scheme, that now you have a turnover scheme that if you sell 10 mobile phones, I will give you 10% post-sale discount. But the question is, what do you do? How do you substantiate that this post-sale discount had a pre-sale agreement in terms of section 15 subsection 3 clause B? Both these have been answered for the insurance sector via circular 186. What this circular 186 says, I will draw analogy. Now, I have only given you an example from a separate sector. Now, I am discussing insurance sector, right? Which has been discussed in this circular 186. Then I will draw interplay analogy, right? In the insurance sector, you all do general insurance. Say you have done a fire insurance. Now, what the insurance company tells you is that in case you have no claim, then I will give you a no claim bonus of 10%. This time you have paid insurance premium of 1 lakh plus 18,000 GST. Next time I will give you a no claim bonus of 10% as a discount, and I will charge you only 90,000 rupees. Now the question which the field formations have asked is whether this 10,000 rupees no claim bonus provided as a discount in the next year, would it be considered to be as a service or not? The answer by the CBIC White Circular 186 is no. It is a discount. Clear discount. And it would not be considered to be as a service. The second question is that how do you show that this is a pre-sale agreement? That can be depicted because on the invoice itself of the first year, where you are charging 1 lakh plus 18,000, on that itself you have written down as an insurance company that, gentlemen, for the next year, if there is no claim, there would be a 10% no claim bonus. So now I will answer you my question, which I drew for mobile phones. Commercial credit note due to a post-sale discount, which is not considered as a GST discount, that should not be considered to be as a service. Interplay with circular 186 for insurance sector. Second, as a mobile phone dealer, if you are giving, or as any company, now there is a turnover discount everywhere. How do you substantiate this is a pre-sale agreement? We have advised from day one to all our clients. There are many schemes nowadays in every industry. Please write down the number of the scheme, at least on your invoice, that this invoice is subject to scheme number so and so, and prepare a scheme document. Then you have substantiated that this is a pre-sale agreement, and thereafter you can give a GST credit note also. So friends, I have done interplay, and that is how we discussed in the very beginning that why we have read the circular for the insurance sector, but even if you are in other sectors, it is important for you because you can draw analogy and do interplay. Another interplay with Insolvency and Bankruptcy Code, IBC. Now, say for example, your corporate debtor is into insolvency. There is a GST demand of 1 crore rupees. There is a moratorium period in insolvency. IBC code, Insolvency Bankruptcy Code, overrides all other laws in the country. Therefore, it would override the GST law also. And it has been clarified in 2021 itself by the CBIC that in case a corporate debtor is in under IBC, then no recovery action can be taken by the department. So no recovery action is taken. Thereafter, when the resolution is done, then it is decided that only 30% of the GST demand would be payable. So what does the GST department do? They don't have to recalculate the demand. They will issue you a DRC 25 intimation to the extent of 30% of the demand you pay off against that DRC 25, and your DST dues will be considered to be as settled. Now, another dispute in the case of Vishaka Export, again, since we are on this point of interplay with IBC, right? Now, since IBC is, going great guns, you as GST professionals should be aware of the interplay. Now, in case there is a scheme, right, a settlement of dispute scheme, while you are in IBC, in income tax, in GST, whatever, can you apply for that scheme or no? Because once you apply for that scheme, but you cannot pay the tax dues under that scheme, mind that, because your moratorium period is still there. So, can you apply for that scheme or no? The answer by the Honorable Apex Court, quashing the judgment of the Honorable High Court, is that in the case of Visakha Export, the Honorable Apex Court has said that, of course, you can go for any settlement scheme, even when you are under IBC, right? The question is, you are under settlement scheme, you are eligible, but if you cannot pay, then would the benefits of settlement scheme not be available to you? Answer is yes. The benefit scheme would still be available to you, even though due to the IBC, you cannot pay in the timeline of the settlement scheme, because Insolvency and Bankruptcy Code overrides all other provisions in India, right? So very, very important interplay we have discussed between IBC and GST. Very, very important judgment by the Honorable Orissa High Court in the case of Vedanta Limited. Now, Vedanta Limited has 3 factories in Odisha. All 3 factories have the single GSTIN. They have not opted for separate GSTINs. They have already got the refund for supply to SEZ, but what they have done, they have very intelligently first taken the refund for supply to SEZ, then they have recalculated the refund amount factory-wise, unit-wise, and they have found that the refund amount is more, and they have applied manually under Rule 97 capital A. The question is, after you have taken one refund, can you reapply under Rule 97 capital A manually? The Honorable Odisha High Court has rejected the manual application and said that for the same GSTIN, 2 applications cannot be done, one by the GSTIN, all the 3 factories taken together, the other by all the different units separately, right? However, with all our due respect to the judgment by the Honorable Odisha High Court, our respectful legal submissions are that still Rule 97 capital A for manual application of refund would still be eligible to the taxpayers. All of those of you who have a technical glitch in the online application, who have already applied but have missed a point, it is our respectful submission that still manual application of refund under Rule 97A would still be eligible to you. Number one. Number two, while the Orissa High Court has taken shelter under the Honorable Apex Court's judgment under VKC footsteps, whereby it is said that the refund eligibility is not a vested right, but it is a privilege by the law. Yet, the Honorable Apex Court in the case of VKC footsteps has also directed the department to amend the formula so that the taxpayers get the maximum advantage. In our respectful submission, even in this case, Rule 89 Subrule 4 may be amended so that maximum advantage can be taken, and in case unit-wide refund is more than GSTI-wise refund, the benefit should be eligible to the taxpayer to claim a unit-wise refund. However, let us see how this case goes, whether Vedanta further appeals to the apex court or not in this case. Well, the Maharashtra government has formed a special cell for grievance redressal of the taxpayers and taking up policy matters with the GST Council. In case you are a transporter or any other person who is issuing e-invoices, then e-invoice not issuing e-invoices where e-invoice is not applicable to you, say you are a banking company, you are a transporter, etc. But if you are selling, say, scrap, then just for the scrap, do you need to issue e-invoices? Answer is no. They have clarified this. Refund to unregistered person. Well, say for example, you have and you as a unregistered individual have taken purchased a residential complex under construction on say 1st of March 2022. However, you cancelled the contract say today on 7th of January 2023. The supplier or the builder cannot issue you a credit note because credit note is time barred. Can you claim the refund of GST because your contract is cancelled after limitation period? Now the CBIC as a welcome step has issued circular number 188 where a functionality is there on the GST portal, and you can claim such a refund on the GST portal by submitting the various details. However, the bigger question, say you are a registered person, then what do you do? Let us take an example, right? Say you are a registered person, you buy a residential house under construction. Same example. Now you cancel the contract. Would the refund be eligible to you? In our legal submission, the ITC would be available to you even though the supply has been made without consideration and a commercial credit note has been issued to you. I am reiterating. You have taken a house under construction, you have purchased, you have paid the GST, now you have cancelled the contract. You don't want the services, but during the interim period, the GST has been charged. The commercial credit note is issued by the supplier to you, but the GST cannot be reversed by him. Our legal submission is this: GST is available to you as an input tax credit in all respects, right? When you are a registered person. Again, while this circular 188 has clarified for unregistered person, I am drawing a parallel analogy for registered person. Period of limitation under GST, right? circular number 185. Now, very, very interesting. I would take maybe 10 minutes more in this webinar, right? But this is a very, very important circular 186, and it is important that you understand this. I have given you this example on your screen. So for 1718, you have filed your annual return on 5th of due date of annual return is 5th of July 2020. I'm sorry, it should be 5th of February 2020, right? But nonetheless, let us consider, we'll just understand by example. It is 5th of July 2020, your due date of annual return. So what is the due date of the show cause notice under section 73? It is 30th of September 2023. So show cause notice can be issued by 30th of September 2023 as per the extended period under notification 13/2022 C Central Tax. Right? For financial year 18-19, due date of annual return 31st of October 2020, due date of notice 31st of July 2023. For 1920, due date of notice is 31st of December 2023. Now, say for example, a show cause notice has been issued to you not under section 73, but under 74, alleging fraud, suppression, willful misstatement. Right? On 31st of October 2023, so on 31st of October 2023, you are issued show cause notice wherein due date as of the show cause notice to be issued for 1718, 1819 under 73 has been lapsed, but due date for issue of notice under 73 for 1920 is still applicable, not barred by limitation. Now you go for an appeal against this a subsequent order, and the court or appellate authority quashes the show cause notice only to the extent of the allegation of fraud or willful misstatement. So the appellate authority of the court concludes that there is no fraud, suppression, or willful misstatement and redirects under section 75 subsection 2 to the adjudicating authority to re-adjudicate under section 73. The question is, what would be the limitation period for such re-adjudication? The answer is it would be 2 years from the date of the court's order. However, very, very important, friends. The question is, now when the adjudicating authority re-adjudicates under section 73, would 17, 18, 18, 19 be considered to be time barred or no? Because the initial show cause notice was issued after the lapse of the time barring period of the show cause notice under section 73. The answer as per circular 186 is yes. Re-adjudication will happen, but for 17, 18, 18, 19, it would be considered to be as time barred, right? So very, very important, friends. Many a times we write, we take seminars only on handling of litigation. For even the officers who have joined this webinar, for you, it is very important that you adjudicate before the time barring period under section 73. For the taxpayers, it is important that in case there is an allegation of fraud, suppression, willful misstatement, then you must contest as a reply to your show cause notice. You must contest on why there is no fraud, willful misstatement. If you see that the show cause has been issued after the time barring period under section 73, even if you lose on merits, then also maybe there is a chance that you might have a favorable judgment under limitation. You might go through this circular. The same is mentioned in this circular 185. I'm sorry, it is circular 185. Same thing has been mentioned. We have explained by means of an example for ease of understanding. There are various amendments to GST rates. Okay, GST on residential properties. You can go through our YouTube channel. We have explained through this. You search Vivek Jalan Tax Connect. You will get our YouTube channel, and we have explained very in a lucid manner on all the rate amendments under by the 48th GST Council Meeting decisions. Right, you can go through this. We will circulate the PPT also. You can go through this also. There are some which have not been notified, some decisions you will see in the budget. So you know what is going to come in the Union Budget 2023, at least as far as GST is concerned, right? So you will see decriminalization of the GST law. Section 132 clause G, J and K, you will see an amendment to the compounding. You would see an amendment in third country export and bond, right? You can go through all of this. This has been discussed in our YouTube channel also. Right, we have already discussed the litigation. And last, friends, to conclude for 2 minutes, right? Those of you who are practicing income tax also, those of you who are in industry, who are only under indirect tax practice, those of you who are consultants or even the departmental officers who are doing indirect taxes, well, interplay of income tax and indirect taxes, right, or GST. Friends, many a times we have seen whenever there is a GST investigation, then there is a stock taking which is done. Many a times we have seen that the stock taking is done in the wee hours of night. And most of the times we have seen that there is always a mismatch which is found due to the stock taking. There is a stock mismatch between books and the physical stock taking. Many of the times under GST, there is an admitted demand to buy peace. However, please note that such admittance of demand under GST can or VAT can lead to a corresponding show cause and corresponding demand under income tax also, right? However, if you get such a demand under income tax, the demand cannot be on the entire admitted amount, but only on the gross profit or net profit element, right? So very important. Again, friends, whenever you are doing any admittance or whenever you are having an investigation under GST, you must always see the implications under income tax. Whenever you are having any investigation or inquiry under income tax, then it is important that you see the implications under GST of such inquiry or admittance of such demand. Now, thank you very much, and we will take questions in the chat box now. Mr. Gyan says, but in hotel GSTR2A ITC is not available due to place of supply. Yes, I was talking about this only. You will see that the CGST amount is available. That is why many of the participants have said yes, CGST credit is available. But SGST is not available in the GSTR2B because of place of supply issues. But it is a trite law that a procedural constraint or limitation cannot take back a substantive right of the taxpayer. So in case this ITC under SGST is also available for a hotel bill, it is our legal submission that corresponding amendments have to be made to GSTR2B by the GST network. Mr. Gyan says they give discount and deduct TDS under 194H. So we can need to issue tax invoice on discount. See, if they are deducting TDS under 194H, then you must issue a tax invoice, right? Because then they are treating it as a receipt of service. However, I would not even for the suppliers, this would create problems going forward. I would say because they have to show it as a receipt of service, and tomorrow if they do not have an invoice, then their expense would be disallowed under income tax. So for you, it is very important if TDS is deducted, then you show it as a service and charge GST, pay to the government. For the supplies, it is very important to not do something unilaterally, because you would be keep putting yourself in trouble, the suppliers would be in trouble, the recipients would also be in trouble. So, Mr. Gyan, I would suggest please start a dialogue with your suppliers. Mr. Ramesh says, sir, we are reversing ITC for non-payment within 180 days. Will there be any issue from the department for not reporting it in the output side? If you are reversing the ITC, you must show it as an output tax liability, right? And you have to show it as a reversal, right? Mr. Ramesh, it is very, very clear now. If you're not showing it as a reversal, netting it off somewhere, then you might get a notice tomorrow from the department and you would fall in trouble even in income tax. Be very careful now. Please follow circular number 170. If you are showing a reversal under Rule 37, second proviso to 16.2, please show it as a temporary reversal under 4B2. Mr. Gyan says vendor gives discount on the bill, then deducts TDS. Yeah, as I said, you have to should issue a tax invoice. Mr. Rajesh says if the demand before IBC registration can be claimed by the department from the director of the company. No. Even if the department is before IBC, the moment IBC is invoked, thereafter, no demand can be, no recovery action can be initiated because IBC is in vogue, moratorium period is in vogue. Mr. Ashok Kumar Agarwal says, please discuss 1 versus 3B mismatch. 1 versus 3B mismatch. In context of what? Mr. Ashish Singh says, why government cannot remove 17.5? It is difficult to understand which input to take and which input card. Mr. Ashish Singh, the government cannot remove 17.5 because all foreign investments would go, cascading effect, impact cannot be there. in today's globalized scenario. Mr. Barun Basu says recovery under 79 is possible for 1718 read with 17.5, 75.12. Of course, yes. It is still not time barred. Mr. Ashwini Ramesh says 180 days rule. Is it mandatorily required to reverse the proportionate ITC every month in 3B? What if we don't reverse and pay interest only at the time of audit, as keeping the tab on reclaiming ITC is a challenge? Of course, the government is very happy if you reverse only after 1 year with interest, right? No problem if you pay interest at 24%. Okay, video link would be available to you post this webinar. However, it would take 2-3 days time, so kindly bear with us till that time. Can you please name the judgment which has been recently passed for ITC on 2000 ITC of 17, 18, 19? Recent judgment, you have to clarify. Often I cannot understand which judgment you are talking about. Oh, ITC for 17, 18, 19. If you are referring to the judgment of the Honorable Apex Court, it is the Bharti Airtel's judgment. But that is for not for ITC, it is for 3B amendment. But if you see in the judgment, the Honorable Apex Court has answered a cardinal question with respect to 2A 3B mismatch. Mr. Bhumeshwar, is there any legal stand on 3B filed after cutoff date for financial year 1920? The assessing officer saying ITC taken will be disallowed. Mr. Bhumeshwar, yes, there is a legal stand. In our legal opinion, it cannot be disallowed, because once the GSTR 3B has been filed, even after the due date, even then 16(2)(c) is complied with. ITC cannot be denied. Now after 37A, the argument gains further strength. Mr. Rajesh says if the notice issued by the officer after 3 years from the due date of 9, then notice can be drawn or assessment recovery will continue. Notice can be issued till 5 years under section 74. Under 73, it can be drawn for 3 years. But recovery cannot happen without a notice. Mr. Mahesh, whether procedural mechanism can be introduced by way of circulars instead of rules? Yes, procedures can be by way of circulars. Mr. Rinku Shinde says taking CA certificate from supplier will be additional cost. Can we recover this fee charged by CA from the recipient? Of course, yes, you can recover this fees. Why not? This is a commercial transaction. It is not a GST transaction. Oh, will this recovery be considered to be as a supply? I would say yes, because you are not recovering any other charges in addition to this cost. But if you consider your earlier, you see, supply and link it to this supply, and you satisfy the clauses of pure agent, then GST would not be chargeable. But I would suggest that if in case your recipient can take the input tax credit, then it is better to charge GST rather than getting into pure agent litigation. Is Rule 42 a permanent reversal? If yes, then reversed yes, of course, Rule 42 is a permanent reversal. You cannot reclaim the ITC. Recently, GST Council meeting, it has clarified on high seas sale. Yeah, is not GST supply, and it would be retrospectively also claimed that those who are already reversed, then the ITC, then refund shall not be available. My question is, before the meeting, if any DGGI officer asked to reverse ITC on the said proportion of transaction and same made by the SSC, so in case refund shall be filed or not? Only if you have reversed under protest. If not done under protest, do it now. please file a protest letter. If you have already admitted, you can file a retraction and a protest letter. Mr. Srisad Gaunkar says, is this rule 37A applicable retrospectively? As I have explained, second provision to 37A, that should be considered as retrospective, right? In absence of anything which is mentioned in 37A, right? This is our legal submission in this matter. Mr. Jaideep Gaur says, can we file refund claim against GST paid on notice period recovery from employee? Only you have paid under protest. If you have admitted, you have admitted. Mr. Gyan says, we have reversed input in 1920 due to not filing of 3B by a vendor for 1819, but they filed the return and paid tax in March 2020. Can we now be able to claim ITC? My humble submission is yes. Second provision to 37A. Whether procedural mechanism can be introduced through circulars? Yes. Mr. Rajesh Sisat says 17, 18, 18, 19, 2A not match and supplier not ready to give certificate. Then can department allow credit if original invoice, date of payment? See, you have to prove that supplier has paid his taxes to the government, right? If you can prove it, my respectful submission is that the judgment of Bharti Airtel is still applicable. If the supplier has filed his GSTR3B, then it would be considered to be as a persuasive proof that tax has been paid to the government. After this, you have no machinery in place, and therefore, Bharti Airtel judgment, cardinal question answered by Honorable Apex Court would prevail, and you cannot be denied the input tax credit on the doctrine of impossibility. The department cannot ask you to do the impossible. Mr. Barun Basu, ocean freight discount, is it taxable? Ocean freight discount. So maybe a foreign supplier has given you a discount, then it should not be taxable. It is not a service provided by you. It is a discount after all. Mr. Shankar Jha says, if we have paid GST under RCM on ocean freight or import of goods. So I have answered it. If we pay GST with interest and 3B is filed after 3 days, interest up to 3B filing date or up to payment days? Okay. So you have paid the amount as per your cash ledger. The department would dispute this, but our respectful submission is that interest should not be applicable just because you have not filed a GSTR3B. Okay, Mr. Ashok Jha, sir, if supplier filed 1 and not appearing in 2B, can we avail ITC as we have satisfied all other conditions and supplier says he will file 1 and 3B together before September 23 for sure? Well, after introduction of section 16 subsection 2 clause double A, I would dare say no, you cannot claim the input tax credit till he amends his GSTR1. Can I avail ITC as per 2B but same cases invoice are not available? No. Mr. Srinivas, no. Mr. Ramesh says credit note issued by supplier is getting reflected in 4B2, which should be permanent reversal. Yes, we have raised this in various questions. You have to remove it from there, put it in 4B1 if it is a permanent reversal. Earlier curriculum PPT and recording are not available, sir. Mr. Ashok Jha. So Avik, I would request you please send the PPT to Mr. Ashok Jha separately for the earlier colloquiums.
Okay, sir.
Yeah. What is the system? Whether apply? Okay. Section 16(2)(c) is applicable from which date? From 1st July 2017. Is there time limit to reclaim ITC? No. Is there a time limit to reclaim reversed ITC? Now you have to see what is the reversal. If reversal is 37A, no time limit is there. Non-payment to vendor, whether reversed ITC is input tax credit. Non-payment to whether we reversed ITC in input tax credit under reversal of others and not shown it as output tax liability. It is okay. Is it okay? No, it is not. You have to show it as a reversal, Mr. Srinivas. Mr. Navneet Mimani says in case supplier closes or shuts his business, recipient has made payment, ITC taken but not uploaded in portal, what measures to be taken? Well, if supplier is still in existence, you can invoke LGW Industries, Calcutta High Court. If the cancellation has happened after the date of your purchase, then you will be eligible to take input tax credit on the basis of LGW Industries, Calcutta High Court. Mr. Ankit Khandelwal says, if I am unable to prove that tax has not been paid by the supplier for 17, 18, 18, 19, whether the assessee have to pay tax on the difference between 2A, 3B, since there is no law that at the time of matching, you can invoke doctrine of impossibility and Bharti Airtel's judgment by the apex court, right? You cannot do any more. If supplier has filed his 1 and 3B, then Bharti Airtel judgment at least till 31st December 2021 would prevail. Mr. G. Sundara Vadivel, 3B to be filed cumulatively in order. Since we have not filed December 3B, we cannot file December 3B from Jan. Yes. 3B has to be filed in sequence. Mr. Gyan says, is it mandatory to claim ITC as per 2B? Even if it is not related to us, yes, you have to claim and then show it as a permanent reversal under 4B1. Please refer circular 170. Our vendor is before NCLT. Can credit be claimed? Of course, yes. Credit can be claimed if he has filed GSTR3B. Mr. Srinivas, table 8A pick up data from 2A, but while filing 3B, data picked up from 2B. Yes, this is an issue. You have to see that you make necessary adjustments under 8C and 6M. Again, we have discussed this in various other meetings. You can go to our YouTube channel also. We have discussed this issue again and again. You can go to our YouTube channel and see this explanation, Mr. Srinivas. Kindly confirm we need to follow 2A, 2B. You need to follow 2B. Now it is very clear. Mr. Ashok Jha says department not considering payment in 3B as paid and charging interest till it is adjusted from cash ledger. Yes. Payment in 3B has to be considered. Once you are paid in 3B, then it will be debited from your cash ledger. But nonetheless, if you have paid in your cash ledger, department will contest, but our legal submission is that it can be litigated. Once you have paid, then department has got the benefit of the amount paid by you, right? And therefore, department cannot say that after you file 3B only then it would be considered to be as paid. ITC reversal on non-payment to vendor, shown as output tax reversal or reverse in ITC? Reverse in ITC. Okay, last question. I would take Mr. R. Sundar. Is there a issue if output in 3B is more than GSTR1? Well, there is not much of an issue, I would say, but still your GSTR1 should be amended, because tomorrow they might come up with fake invoicing and other issues. Even under income tax, you might be questioned on this. So you must ensure 1 and 3B match for all practical purposes. Okay, so there are a few more questions. I would request you can mail it to us, because for the benefit of all other participants, it's already 20 minutes post our slated time. So, Mr. Rajesh, Mr. Gyan, Mr. Srinivas, you can send your questions to us separately. We will share this PPT and the video link with all of you. Thank you very much. And next week again, we would have another webinar for direct and indirect taxes. Stay tuned. Thank you very much. Over to you, Mushmi.
Thank you, Vivek sir, for this wonderful deliberation. Thank you all the participants for attending the webinar. We conduct such webinars every month, and we hope we will get you in the upcoming webinars as well. We will shortly share PPT and video link to all the participants. Thank you.